trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast.
7 people, 3
in my
thumbs up.
ears,
Give a
guiding me
thumbs
through my
up.
hopes and fears.
Ooh, now we got 6 people, 7
Tune in daily, don't miss a
If
single
that
show.
pace keeps
Sign up
up,
for the newsletter,
good.
let us help you grow. Taking risks, making moves, seeking success. Together we'll
down.
conquer, no room for any less. Listen.
I'm here. I'm here. I'm with you. We speak your names. I've been working in the strategy lab, by the way. AI strategy. I still haven't come up with something that beats the 4-hour algorithm. Just so everyone's aware. That algorithm is so damn good. I gotta turn on my do not disturb. Do not disturb. What up, Sean? Sean, I hope you're playing in the strategy lab there. And I hope Trendspider is all you hoped it would be. We got a lot. Boy, there's a lot of red today. Whoo! Dell. I mean, I should probably go over some charts, but there's just too much news to really go over. Look at this. I mean, you've got your opportunity to buy Dell on that trend line again. Apple, you know, here I'm going to take us out of the strategy tester. Let me see. We'll go to a weekly chart. Apple, you got chance to buy it at below 250. Amazon below 220. Look at in that channel. You're still in that channel. Bank of America at 43. It's turned over on a weekly. You're back within this range. Berkshire, all-time highs, and then it kind of turned over. Costco at 953. Remember, this just last week traded to $1,000. Dell at 110. We've talked about this one, how I think it's going to, it's probably got like 150 in it pretty easily. Disney, you're going to go back under 100. I don't know what to tell you. I mean, Disney's going to go back under 100. Then you got Google, 187. This one pumped all the way to 202 and then has pulled back. And Goldman Sachs, Goldman Sachs is just, it's just straight right. I bet Bitcoin's back under 94,000 or something. We don't have a 200-day on this one, but, you look at the 4-hour and it's rolled over. Everything's rolling over. Coke, which traded to 68. It's back above 60, but or traded to 70. Eli Lilly back at to 821 when it was at 7 something down here. But it ran all the way up to 832, pulled back. Take a look at a weekly on that one, and we're seeing it kind of pull back towards those support channels. Meta under 600 at 590. I think you've got 550 in this one at the worst. So at 590, just start buying it. You got Microsoft pulling off the 440 level. That 450 has provided significant resistance for months now, going all the way back to June. Netflix at 896. This one pumped all the way up to, 928. 935 is the high. 935 is high. NVIDIA can't get above that 130, but when it does, it will. That 140 is providing some significant resistance. Palo Alto Networks, look at that weekly. Palantir, we've seen this one turn. This one needs to turn over. Absolutely needs to turn over. Qualcomm, this one has turned over. I'm going to remove all the text. Turned over this high that was in June at 207. We haven't seen it even come close to having confirmation on a weekly on that one. The Qs on a weekly, you're being held up by that 9-day. Now, if we go to a daily on this one, this is what's interesting, is that 50-day is at 507. Where are you trading right now? 509. But over this year, you can take a look at this weekly chart. If we've even come close to the 50, which, by the way, is at 468, and if we get back down there, start adding. This rollover needs to happen. Roblox is down under 60 at 57. I would assume we come back to the 45 range on that one. Shopify at 104. I think this got to 110. This weekly chart, you can see we saw that break, and we've seen this new channel. Now, where are you coming back to? You might come back to 90. So Tesla at 426. If this gets under 400, start adding to it. Again, that all-time high, 436, we've broken down below it. So maybe you have 300 in it. If you get under $400, buy it. Taiwan Semi, I said this before. I think you can buy this one at 191, anything under $200, and I think it does go over 200. Uber, we're seeing it break down again. It's at 60. It's breaking down below that. This may be, I wanted to hold on to it for a long term. I don't know that I am. I've got a small gain in it. I think I've got one gain and one loss on a thing. But I like Uber. I think it's a good one. And VOO, this is what's interesting, is if you go to a daily on this one and you go, look at that gap up. Now we're at 535. Where's 535? That right there is the election gap on a daily on VOO. It's the election gap. So it's not, there's nothing bloody. Where in the world do you see a bloodletting in this chart? I don't see this 2022 happening again. It could. Remember, Elon promised, hey, if Doge gets in there, we're going to have some pain. Yeah, Sean Trendspider. By the way, Sean is the winner of the one of the Trendspider giveaways. And I'm telling you, it is deep. It is impressive. It is hard to get. But once you understand Trendspider, I can't tell you enough how great Trendspider is. Okay, we got 9 thumbs up, 23 people in here. Hit that thumbs up button. Larry. Okay, is on her way, she said. Walmart at $92. I mean, this is a stock that's just holding up. I mean, the high on Walmart was $95. You're at $92. There's no bloodletting in that one. You know, XLK, this is down at 231. Look at that weekly chart. There's not a lot. Thanks, Leslie. There's not a lot of, you know, it looks bad in the near term. I mean, XLY is down 2% today. For a sector, that is crazy. Crazy. Yeah. This was, there's more room to run for XLY, and I said that. I said once we got past that all-time high at 2021, I still will be holding plenty of XLY, but wanted to increase my exposure to tech. And I said that, I think that was about as we passed this in October. I think I put that note in. But I honestly, I don't see a lot of problems with the market. I see some short-term catalysts, and we'll get into it. Morning, Jacob. But I do, you know, there's some short-term stuff. I just don't see long-term stuff creeping in yet. But again, you know, if you have to look at these weekly charts in order to understand how far we've come. Because, you know, if you even do it to monthly, it even looks more impressive. And if you get down to that 50-day on the Qs, which again is around 470, 467, you don't want to wait for that. You know, at 509 right now, let's see. The high was this week at 539, and you're at 509. So, you know, this is a 3% loss on the week, which hurts. It's not fun, but there's no panic. Again, the panic is what kind of just shocks me. Because yes, I'm losing a lot of money, and I will lose a lot of money. I think my Webull account, which is all iBit and Nvidia, that was at 11,000. Let me look at it. I'll show you exactly what it is. Let's see, Webull. Oh, and it shot up with the inflation numbers, but there's Webull. Let me see if I can show it on here. I got to get to there you go. 10,600. That was over 11,000. So, and listen, that's not my, that is not my, my main account. You know, that's just, that one is what it is. And I, you know, it's to me, this is like walking into a store and seeing your favorite shoes on sale for 10% off. And if we get a 10% correction, right now it's like a 3%. If you walked into a store and saw your favorite sneakers on sale for 5%, would you be jumping for joy? No. But if you lose 5% in your portfolio, you're panicking? No, AVGO, I mean, WF, I've commented on AVGO before. AVGO for me is a long-term buy and hold. I mean, AVGO and NVIDIA are the only two stocks that I hold. This is a 5%, minus 5% candle. The week after, just, you know, great earnings. Okay, hold on one second. She wants to come down. If she starts yelling, just let me know. I don't think she's got to go, but... Ooh. Okay, let's move me over back here. Sorry. I had to let the dog out. Ooh, let the dog out. Boop, boop, boop. But AVGO is a long-term buy and hold. I mean... I don't know what else you'd like me to say about AVGO, because if your thesis was short term, you've got some problems. But for me, I mean, WF, did you get into AVGO and why? Is it long-term or short-term? Because the long-term chart looks perfectly fine. And if you got into it long-term and you didn't look at the weekly and say, oh my God, it's that far above the 9-day, AVGO, let's go over here and look at the report. It's a strong buy in Wall Street. Let's see what Wall Street says, the strong buy. They say it's worth $232 and you're trading at 217. I mean, to me, that's probably worth it. So, but again, I do think that AVGO is not in the core portfolio, WF. I was just going over the core portfolio. So, Matt, I'm going to go over it, just kind of spoiler. And we got 36 people in here. There better be 36 and thumbs up because right now there's only 16. So if you haven't hit it, hit it. But Matt, my thought on the government shutdown is it will be a shutdown, I think, unless Mike Lee comes up with something like crazy like he's doing right now. You had 37 Republicans vote against just a clean debt ceiling limit. And my question would be, politically, if the Doge campaign is really going to work and cut $2 trillion out of the government, what do you need the debt ceiling raised for? I mean, start cutting now, right? I mean, layoffs, shut it down. That's what they wanted. That's what they were trying to get. So I don't understand it completely. I think there's a lot of political games, which I don't think that these guys are very experienced with. And I think, remember, Doge is not a government. It's an outside body. So while these guys may think that they're doing something, they're just an outside body. But I think, again, I'm for less spending in government. I just don't think that they're going to be able to cut $2 trillion out of the government without affecting Social Security and Medicare. I mean, they've said they won't touch it. You can't do it unless you're going into defense spending. And nobody wants to cut defense spending. I mean, Republicans aren't going to do it. You're going to tell me that a Republican congressman whose entire, defense is heavy in red states, and the senators and they're going to vote for that. Troy, if they want to cut now, shut it down. They can't officially do anything until Trump gets in there. But if you want to cut spending, what better way to cut spending than a shutdown? I mean, that would be my thing. Hey, we got 20 thumbs up. And so, Matt, I'll go over my thoughts on it. I think the shutdown is going to be alleviated either today or over the weekend so that Monday, no government official that works for the people wants to shut down and put people out of work, specifically the TSA, will go without pay during the heaviest flight time. You think you want to put a TSA agent out there who's working on Christmas who doesn't get paid? That's, just crazy. Keo Lending Club, I mean, just perfectly blunt with you, and I won't say this outside of the live version, but it's a alpha pick. So for me, let's see, where is Lending Club? Because I own it. I own it through Alpha Picks. It's a strong buy. Let's see. It is. It was. I think I bought it like 17 something. So, yeah, it's 16.30. Keo, here's the thing. Why'd you buy it? Was it short term or was it long term? What was the price target that you wanted it to get at? What was your stop loss that you would sell it at? All of those things need to be told to yourself before you get into a trade. Because my strategy with Lending Club was simply just 100%. It's an alpha pick. So I would put it back on you and say, what was your assumption about it? Because if you bought it after Q2 earnings, what did you like about it? What didn't you like about it? And again, and I say this a lot, the only thing that matters to most people is price. Because if you're down on that, you don't care that the price target on Wall Street is, let's see, what's the price target on Wall Street? You don't care that the price target is 11% upside to 18. So I just, it's an alpha pick. So for me, commenting on your position, should you worry? I'm not, because they'll tell me when to sell. So, I don't make decisions about, that's what I like about alpha picks is the portfolio is proven. It's a proven track record of a portfolio of buy and hold. It is 2 data-driven stocks every month, and they alert you when to sell. So I would put it back on you and say, okay, what was your strategy when you got in? If it's broken your strategy, then yes, you should worry and you should sell. But if it hasn't broken your strategy, then, again, I don't think it's valued correctly. I mean, you can look at the virtual analyst report, and we can go down and look at the valuation is a C+, presents a mixed valuation picture. EV sales of 0.92 indicates a 71% discount. But its PE of 39 suggests an expensive stock. Growth, the growth measures shows some challenges. Year-over-year revenue is down 6%, slightly below. However, its long-term earnings per share growth forecast is 19%, which surpasses the sector's 10%. Profitability, it's great. Levered free cash flow margin of 97%. That's amazing. Momentum, it's been on a heater. Revisions, they're all revising upward. So should you worry? That's up to you. My thing has been, hey, it's an alpha pick. And again, if you want alpha picks, you can get the portfolio just by going to Linktree and signing up for it. Let's see. Brokerage holdings. We're going to do some scans because the PCE came in line. I think that's the one I need to. This is the favorite inflation gauge. So inflation is cooling off, which did push the market up. So I don't exactly know what the market is. Let's see. What the market is necessarily going to look at in relation to this stuff. But it looks like the futures did pick up. Look. You got a little bump. You got a little bump there. From 8:30, it pumped up quite a bit. 8:23 bumped up about the news about the government shutdown vote and PCE and kind of held there. So the implied open looks pretty, it doesn't look positive. I mean, it just looks better than it did. I do deserve more subscribers. I mean, that's the thing is when people ask me about stocks, I can't comment on portfolios, just so you know. I mean, should I own this one over this one? No. I mean, if you ask me, should I own Eli Lilly or Viking Therapeutics? I don't own either one. So I think that speaks for itself. But again, you've got to kind of, work your way through. I'm not qualified to manage anybody's portfolio. And if I was qualified to do it, I would do it. But I don't manage anybody's portfolio other than my own and my parents. And that's it. And I know people want me to give them help. But again, I think the help that I give you is pretty clear. You make your own decisions. And the only reason people ask me for help is because they're uncertain. And sorry, but getting an answer from me isn't going to give you certainty. ETFs, TSLS. This is the short, one-time short Tesla. So it hasn't been good, but look, it's turning over. That's an interesting one. But yeah, if you're asking me, that means you're uncertain. And for somebody to ask me about a strategy or anything of that, tells me you haven't done your homework enough to convince yourself. And that's always my point, is that when you ask somebody that you don't know, and it may be somebody that you respect, like, you know, a lot of people are like, oh my God, he retired, he did it. I did it by buying and holding. I didn't do anything that anybody else couldn't do. And I said it yesterday on Spaces. I said the reality of it is I bought the iPhone, I bought Apple stock when the iPhone came out. I bought Amazon when they launched Prime, and I started using it. I bought Google when I started using Gmail. I bought, what else? Netflix when they started streaming. You know, I bought Tesla when I bought the car. I made the mistake of selling. And yes, that's a lesson learned. I should have bought and held. So I actually did sell Amazon during times. I sold Netflix when I shouldn't have sold it. I bought Microsoft because, you know what? I saw every office in the world using Microsoft back in the 90s. I enjoyed a great run on Microsoft. And then for 10 years, the damn thing didn't do anything. Did I sell? No. Did I trade it? No. Just held it. Just held it. I mean, it's a lesson learned that you could probably make more money by understanding long-term trends. And that's why I got into charts and weeklies and monthlies. But again, if you ask me for trading advice or anything like that, I can give you technical advice. I can show you where to look, but I can't make the decision for you. And that's I think where a lot of people kind of mistake. You know, if you want somebody to make a decision for you, hire a financial advisor. So I've got one. I got Stuart over at Fidelity, and he gives me great advice. Great advice. But I don't pay him to make my stock advice, stock stuff, stock decisions. So, yeah, Nathaniel, I mean, I talked to Steve Kress about the comment section because even my interview with the investing expert stuff, there were people who were criticizing me, and I think they removed a bunch of the nasty comments because I was fighting with people. It's a cesspool. I mean, when you put yourself out there like I do, I mean, you get the comments and stuff, and sometimes that's why I'm grumpy. Is just because I think people rely on me too much, and you shouldn't rely on me a lot. But B, man, if I make a bad call, that's just, you know, like yesterday. I'll give you a great, for instance, yesterday, and I gloated about it, and I was 100% wrong. Nike. I was on Wolf's podcast, and I was it was at 2 o'clock or 3 o'clock yesterday, and there were, you know, hundreds of people in there, thousands of people. I don't even know. But I said, he came to me first, which I appreciate Wolf. And if you guys aren't part of the Wolf crew on Twitter, go follow Wolf and join a space every now and then. Because those guys, they really do. Some of the guests that they have on are absolutely, and by the way, MicroStrategy, there you go. What does he say about it 36 minutes ago? Just wear a hard hat. But the Wolf crew is absolutely great. They start their stuff, live stuff, I think at 9 o'clock in the morning or so. I'm not exactly sure, but follow Wolf, WOLFE, I think. Yeah, Wolf. It's just Wolf _financial. But I was on there yesterday, and I told Wolf and Hamid, who runs Earnings Hub. I told him, I said, you know, here's the thing. I'm at a Simon Property Outlet Mall, and the only store that is absolutely packed is Nike. Doesn't mean that the earnings are going to be great, but it's kind of interesting because for the first time, I bought Nike clothes. And I brought up Apple, I bought it the iPhone, I brought up all that stuff. And I said, you know, this might be the turnaround. I can't look at a stock chart right now because I'm literally sitting in my car. And I just don't trust a mobile phone to be able to tell you guys, hey, from a long-term perspective, this looks good. But I said, go look at the charts for yourself. And I said, the fact that a store is open, and I said, it looks good. What happened? Well, let's go look at Nike, and let's look at a 5-minute chart of this one, because what's interesting is after hours, look at that. That's a move from 77 to 87. It was like 14% immediately. And then as the street digested the news, because it was good earnings, as the street digested the news, and then it came in, and then the CEO here during the call at 4:30 said, "Hey, we're happy with where we are, but it's going to be a slow and steady recovery. It's not going to be fast." And so, yeah, I was gloating during this time. Hey, it's up 10%. This is great. You know, I made the right call. Boom. I was made to look like a fool. In pre-market, you are down 5%. You've been down as much as 10%. So it's just not a good, and I even said it, it's not a good stock for me to get into. I would much rather buy this at 100 when it's going up than to buy here at 76 or 75 when it's on its way down. The long-term trend is down. Wait for the trend to turn. So, but yeah. Okay, let's start opening up some. This is a great Google Chrome. This is a fantastic video with Peter, or a fantastic list. And it's part of the education, and it's just about, hey, you got to know when to sell. Just I go over when to buy a lot, but you got to know when to sell. These are FedEx earnings. We'll go over that. These are Nike earnings. I probably should go over Carnival earnings too, because they announced before the bell. Let me just look. CCL, because Carnival is an alpha pick. It's down a little bit. It was up 1.45% yesterday. In focus. Yeah. I mean, it's good. It's just a good stock. I mean, that's been killing it for me. And I made the mistake of buying $25 or $5,000 worth. I forget. But Nike earnings are good. This is an article with the 25 highest conviction stocks from UBS, and they took a look at risk reward, and they like that one. If you are going to be in the GLP-1 space, Shibu Lor likes Viking Therapeutics because Novo Nordisk, which we'll go over the story, it crashed after data from this next-gen obesity drug. Eli Lilly spiked because, it's just pick your winners, or, get an ETF, one or the other. That is a know what you're getting into with quantum computing, and it's to go with, I think Nathaniel had made mention, the quantum computing to the moon. Steve is getting a lot of stuff. What does Michael Saylor say about Bitcoin's drop? We just saw him go on. He's using AI to make pictures of himself, and that's great. Let's see. MicroStrategy got killed. This is a comparison of MicroStrategy to SMCI. NUKK got killed. This is a great little thing. Breaking value stocks are now. How do you find value stocks? We'll kind of go over, look at that. I've got a bunch of just commentary on some stocks that popped yesterday, and I'll look at that from one of my favorite newsletters, and I won't mention it because I'm testing it out to see if I really believe in it. I do like it, but I'm testing it out, so I won't kind of do that. As Trump pushed the bill, stock ended for pair losses as, of course, CPE coming, but this was more about the Trump bill, so they changed it. Oh, I guess it's just looking forward, and they changed the headline and stuff like that. Yeah, so there's that. This was a great read. Markets tanked after the Fed cut, but what's really changed? This was a great read, and I'll read you the paragraph that I really liked, but that was a fantastic read. This is a clip from Peter Lynch. Okay, come on. Man, she wanted to come back in. I'm watching her bury herself now. This is a great clip from Peter Lynch on pullbacks in the stock market. And you should absolutely watch this every time. Now, we will open this up. This is the top 10 stocks for 2024. Remember, that's a review, but it's because Steve Kress, and if you're on Seeking Alpha, man, you are just getting a ton of pop-ups, and it's a shame. And if you're going to complain about the stock market going down, every sign was there. Every sign was there. Just FYI. The sign was there. So let me see if I have to respond to any. Do you think MPLX will be affected by the EU tariff talk from Trump? I don't know. I don't know enough about MPLX. I own MPLX not because of the EU tariff stuff. I own MPLX because of the dividend. And until that stock stops rising and the dividend doesn't, maybe they reduce the dividend, I'll keep it. So, do I see any discounts? I mean, here, Matt, remember, I bought Alpha Picks, the entire Alpha Picks portfolio on a Friday afternoon. So if your outlook is long-term, don't let the Friday rule kind of throw you out. If it's a trade, I'm not trading on a Friday. I think that's more the rule than, hey, don't buy on a Friday. It's just don't trade on a Friday. Keo, yes. I will tell you, I think it was every one of the, let me just read real quick. Let's see the top 2024 stocks. There was top 2024. These are ones that he went over. Abercrombie & Finch is in the portfolio. Modine is in the portfolio. MI Homes is in the portfolio. Gig Cloud was in the portfolio. It's no longer. Dorian is, yes, it was in the portfolio. It's no longer. Rolls-Royce, it's not in the portfolio because it's a foreign stock. I think they have a rule against that. Intensa, Sapolo, I think it's not in the portfolio either. Meta is in Alpha Picks. Celestica is in Alpha Picks. And AppLovin is now Alpha Picks. So the majority of them are in Alpha Picks, just so you're aware. And I know Seeking Alpha, listen, if you're out there and you're going to send me a nasty note that I shouldn't be going over the entire list, come on. I have sold enough Seeking Alphas, and my belief is that you haven't paid me for enough of these. Seeking Alpha is a fantastic tool. Just understand, Seeking Alpha to me is as good, if not better, than having Trendspider. And the reason I love it is because I don't have to think about things. And Seeking Alpha, there's two things in Seeking Alpha. There is the premium and there's Alpha Picks. If I had to choose for me one, it would be the premium, not Alpha Picks. And let me go over the difference. So premium, you get the virtual analyst report. You get the quant rating. You get to read all the articles that you want. Nothing. It's all commercial free. You get you can go over to the top stocks. You can go over here and say, oh my God, what are the top rated quant stocks? Well, it's KINS, it's LX, it's CCL, it's PSIX, it's QFIN. You can track these things so that when they enter a buy in a chart, you can maybe make some money. So that's what I like. And I like doing my own research. So I enjoy that. Let's see. Join our exclusive for long-term investors. I think that's, you'll love Alpha Picks. Why are they promoting Alpha Picks to me? God, they are getting so bad with their pop-ups. And it's promoting them themselves. I mean, again, I want it commercial free. But that's why I would like Seeking Alpha Premium, is because I want to do my own research. And there's a second part to Seeking Out the bundle. It is Alpha Picks. And you can buy these separately. Again, if you go to my link tree, you can buy them separately. But the reason Alpha Picks is such a great bundle to it is because the portfolio is proven. Again, over time, it's made, since its inception, 178% versus the S&P at 60%. That doesn't mean you won't lose money. Some people, are complaining, hey, I'm losing money on this. It depends on when you get in. But it's a long-term portfolio. So if the market starts to go down, and again, we're at all-time highs, if we have another 2022, it doesn't mean that the market won't go down. But because it's a data-driven portfolio, if the S&P loses 20%, maybe you're actually only losing 5%. So that's the key to the entire portfolio, is making sure that it's a managed portfolio. And they do a great job of it. So it's two different things you can buy here on this one. On link, well, I'm just going to go over it on here. Okay. I'm going to hit record and start recording now. Well, Seeking Alpha Premium's awesome, Keo. I would say buy the premium. It depends on what type of investor you are, and that's the thing. If you're somebody who wants to do your own research, Seeking Alpha Premium makes sense. If you're somebody who just wants to be fed and maybe look at charts every once in a while, and you don't necessarily care about new stocks, maybe it makes sense to, just stick with FinViz. It's really up to you. I just, FinViz, I get sick of reading articles on FinViz with pop-ups and people talking their own book, and I don't know who's who, what's what. And that's what I like about Seeking Alpha is I don't follow a lot of authors. I follow Steve Kress. I follow a couple of others. Michael Wiggins, I think, is one that I follow, but I don't follow too many. But I do, just like I backtest my strategies, I backtest these efforts that are writing articles. If you don't have a winning track record, I'm not going to follow you. I'm not going to listen to you. And when I say listen, I take advice. I put it through my own brain. That's it. What were the signs of the market going down? Two things, Sean. There was the Fed meeting where they said we're going from 3 rate cuts to 2, which shouldn't make a difference whatsoever. You should want that. But now you've got the government shutdown, and you've got uncertainty, and you've got the one thing that the market doesn't like is uncertainty. So I'll go over more of it, and I'll read my notes. But there really is no sign other than here. I mean, look at QQQ. I talk about it all the time, how it's got these button hooks kind of things. The market loves these little pullbacks. And look, Q's got you out with a nice, what's that, 3% gain, 1% gain? I can't even read it. 1.1% gain. So it got you out. Would I be getting in right now? I'd wait for the 4-hour algorithm to tell me to get in. So again, it's just more of your kind of process and things that you do, process that you develop. So, yeah. And Keo, I mean, I think somebody said, hey, Seeking Out, they wrote it back, and I played the Ricky Gervais clip of his Golden Globes. This is the last time I'm hosting this show. I don't care. I love Seeking Alpha. There are some people at Seeking Alpha who are fantastic, absolutely fantastic. But I do think that they don't give me credit for all that I sell. And that bugs me a little bit. But the main thing that bugs me is it's not working with Safari. And they still, it's their pop-ups. I know it's their pop-ups. I've looked at the underlying stuff. It's their pop-ups. And Safari, after the updates, it doesn't like it. And I submitted that ticket. It took them 3 days to look at it. And then they said, we can't replicate it. Bullshit, you can't replicate it. Every freaking computer in my house is a Mac. Every freaking computer, whether it's my Apple ID or my mother's Apple ID or my father's Apple ID, on Safari, it F's up. You can't replicate it? Bullshit. So... But the tool, again, the tool is phenomenal. I'm not moving away. I mean, until I find a better tool, I ain't moving away. And it's not like I'm out there looking for a better tool. They do come to me. But so far, I haven't found anything. Okay. Let me go on, and I'm going to hit record now. Because it's freaking, what is it? Yeah, it's 9:15. Good morning. It is, let's see, it's Friday, December 20th. Could be on the verge of a government shutdown if you're worried about the market going down. I covered it on Wednesday. Yesterday we had a nice bounce, but the things that I went over, we're not through. The Fed is still only cutting 2 times instead of 3 times. The government still could potentially shut down, and you've got a triple witching day. And if you didn't read my newsletter, I have no idea why not. Again, you need to subscribe to the newsletter if you're being freaked out by this. This is what I went over yesterday. This is the newsletter literally from yesterday. And I said, be careful. Even if we get an up day, we're not out of the woods. And so subscribe to the newsletter. It's dailystockpit.substack.com, or you can just go to Linktree, linktr.ee/dailystockpick. It's on the screen down below my name. And you'll see Daily Stock Pick newsletter. It's free. There's no reason to even why wouldn't you sign up? That's my thing is why wouldn't you sign up? So the Qs got you out yesterday in the 4-hour algorithm. The 4-hour algorithm is in Trendspider, and you've got a sale going on Trendspider. So you go over to Linktree, you use that top link, and you've only got 2 days left. Get it. I have talked about this before. If you are nervous, if you want to know when to get in and out of the market, try the 4-hour algorithm. You know why? Here's the thing. The 4-hour algorithm got you out yesterday, okay? Today, it's saving you 1%. The 4-hour algorithm over 24 and a half months, just on the Qs, it makes you 83% versus buying and holding makes you 79%. This is back-tested. This isn't like an opinion. This is actual fact. 24 months, 17 positions, you win 65% of the time. Look at how it gets you out before that big downfall. Now, it still gets you in during the downfall, and you may lose because, again, you only win 65% of the time. If you have a 100% track record, you are not listening to me. Because if you have a 100% win rate, you are either super poor or you're super, super wealthy. Because a 100% win rate means you're lying and you're super poor and you just have FOMO. Or you're just lying. One or the other. Nobody wins all the time. So, again, QQQ, you're out. Let's go look at the S&P 500. With the S&P 500, you're also out. It got you out in the morning. So, again, on a Friday, when the 4-hour algorithm gets me out, I'm not buying for the long term. I am looking for entries in the 4-hour algorithm. So, typically what I'll do, managing my larger portfolio with these 2 ETFs is when it triggers me entry here, I'll just go and buy. When it triggers me out, I'm not looking to get out. I'm looking to get in. Why? Take a look at a weekly chart here. Okay? I am not worried about little downturns. You don't even see this week. This week may seem horrible to you. We're down 3.5% on the S&P. MACD still super high. Look at how it continued to rise during this entire 2021 period while the MACD was that high. Is that what we're dealing with? Well, we've already gone through a period since April where we've continued upward and the MACD has been high and the RSI is high. But look at what happened in 2022. Am I predicting this? No. We'll go over a lot of these things in this show. There are going to be a lot of macro kind of things. Hey, this is what you want to look for. This is what you want to look out against, blah, blah, blah. But in the long term, I'm using this 4-hour algorithm in Trendspider to find me entries, not necessarily exits. The last portion of this video, if you want to just skip to the end, or if you want to go to the newsletter, I will include a clip from legendary Peter Lynch as to the market downturns, and I will include a legendary investor, Stephen Burns. He's got a list of when to sell. We'll go over all of that. We'll go over how Nike, just tanked the bed after actually beating and seeing a 10% move up and then winding 10% down. We'll go over FedEx, why it's actually a good thing that they're breaking up into a bunch of companies. We'll go over GLP-1 because Novo Nordisk just shit the bed as well. Eli Lilly was up, off of GLP-1 because we're in an AI thing. So, but if you want to know the number one indicator as to why the market went down, it was there. Look at your screen right now. The market has done nothing but dump since Jim Cramer went all absolutely giddy with Donald Trump. It has done nothing but dump. So the sign was there. It was 100% there. Now, if you're worried about 2025, here's the thing. Steve Kress, who is the master of the quant in Seeking Alpha, he is going to go over his top 2025 picks January 8th. Sign up. Okay, I will include a link in the newsletter. If you follow me on Twitter, it is this tweet. And there's a link to sign up to register to actually get it. If you are not part of Seeking Alpha Premium, I will give you a discount in that link. Okay? The link includes a discount. You can go over here and you can use the link right here to sign up for the exclusive offer. You get the $30 off and then a free 7-day trial. So you can, here's what you could do. Use my link, get the $30 off. Sign up on, January 5th, January 6th, but use my link because you do get the $30 off. Get the top 10 stocks, and then you can cancel after the free 7 days, or you could keep it, one or the other, because I would argue that it probably makes sense to keep it because if you want to trade these top 2025 stocks, you can do it. But remember how good the 2024 stocks did? And that's what this article tells you is how good the 2024 stocks were. Okay, there were several of them. This is what he wrote back here. Let's see, does it have the publication date? It was December 31st, 2023. So again, he's hosting that one. I think it's going to be a great event. I'm going to join in there. I am not on the panel. They didn't ask me to be on the panel, but I will be there. Here is the clip from Peter Lynch talking about pullbacks in the stock market. If you are worried about today, if there is fear in your inner heart about your portfolio, go and watch this clip. I just posted it. And it's on my Twitter or it will be in the newsletter, one or the other. Again, the newsletter is just a nice little, it's like the Cliff Notes for those boomers. It's a Cliff Notes version of what happens. Watch this clip. Essentially, he says, hey, during the 93 years that the stock market, and again, I think this was in the 80s, he goes, every 2 years we see a pullback, and it's a 20% pullback. So odds are you stay invested and you make money. It's a buy and hold strategy. So I will tell you, again, the buy and hold strategy works for some stocks, doesn't work for others. You have to make your determination about what you're buying and when you're buying it. So the market's tanked after the Fed cut rates, but what really changed? This was a phenomenal read. And I will tell you, I really like this one. Let me first go over before I do that. Let me read kind of what I wanted to say. Okay, the S&P is looking at it. It's 50. If you look at the S&P on a daily, okay, on a daily chart, when we had the election results, okay, when Donald Trump won the election, you saw that bump. This is election day. You saw it bump up from 529 to 538. Okay, 535. Where are you trading right now? 536. We've pulled back the entire election. You didn't pull back the entire year. You pulled back just the election results. That's it. That's it. And there is uncertainty. The Dow broke its 10-day losing streak. If we go and look at DIA and you just look at it daily on a DIA, well, I guess it didn't. It just narrowly missed it. So it narrowly missed it. But again, narrowly snapped its longest losing streak in decades, providing some relief and concerns over the Fed's hawkish stance. Bitcoin traded down to 97,000. I think it's down at 94,000. While oil prices fell due to anticipated supply in 2025. That's why Trump is threatening tariffs to Europe if they don't buy American oil, because there's oversupply of oil. Traders just want to get through tomorrow's inflation data unscathed so they can head off for the holidays. And that's what it's all about. It's going to be about just getting by today so that next week we can enjoy low volume, we can enjoy low volatility. But if you've got a government shutdown, if you've got a bunch of things, we're going to still see some stuff. And what I want to do right here live is show you just a little bit of what you can do with Trendspider, with Seeking Alpha. If we go to BRKB, okay, this is Berkshire. And if you remember, Warren Buffett was selling Apple. And he was selling Apple because he said, there's no reason, we just became too big on it. Well, look, okay, the orange line that you see on your screen, that is Berkshire. The blue line is Apple. And so you see how Berkshire was outperforming. Okay, this isn't a 1-for-1, and it's never always going to happen. But it is interesting that Apple, with its recent run-up and Berkshire's recent weakness, has caught up. So if you want to run that chart, I'll put it in the newsletter. And I know you can't see it because of my head, and somebody complained about that. Sorry, my head's big. It's going to get in the way. But I thought that was super, super interesting. And I thought this analysis that specifically markets tanked after the Fed rate cuts, but what's really changed, there are a couple of paragraphs that I will read you specifically. It's a pretty long read, but it's really, really good. In September, the Fed rate cuts by 50%. Now, understand that this person is kind of biased, and he thinks that the Fed actually cut things too quickly. And so you have to read this with, understanding that he has said hold here. Okay, the S&P is up 49% since he had said hold. Right here, he said sell the S&P. The S&P is up 28%. So take this with a grain of salt. But he provides facts that are very compelling. In September, the Fed cut rates by 50 basis points. The federal government, the case was much stronger for 25 basis points. That's what he was saying. The federal government continues to overspend, and the basic economic theory is that when this happens, the Fed is supposed to rein things in by keeping rates high. Otherwise, you risk getting a nasty round 2 of inflation, and that's what the market fears is inflation. We got inflation. It cooled off in November. Now, if you take the summary of economic projections at face value, the Fed is starting to realize this, which means that the market's previous expectations of sharply lower interest rates without a recession were never going to happen. That's this author, Logan Kane. That's his theory. He says, in researching this article, I ran 30 interest rate models based on the Taylor rule. And there's a link in there if you want to understand the Taylor rule. Go and Google it, which is a well-known macroeconomic model that shows where interest rates should be. Historically, when the Fed deviates from the Taylor rule, it is the Fed that is behind. And what do you know? 28 out of 30 models are recommending that the Fed raise interest rates. This is what some market participants are saying, that 2025 will not include rate cuts. Not even the 2 that Jerome Powell suggested. He's saying that it's going to be rate increases because inflation makes it back. And my note is, mind you, the author is in the camp of less rate cuts are better, so he's biased. And if you look at his track record, it's not great. But I wanted to bring this to you because he does bring up facts, and it's an interesting theory. Do I believe the theory? I'm still bullish. We are in a bull market until you're not. And so if I go over here and just look at the S&P 500 from a weekly standpoint, okay, the candle this week, sure, it's pulling back to that 21-day. Sure, it might pull back to about 500, which is that 50-day. But we're in a bull market. And so you can see 2022 just looks like a blip. This was July 2023 to August 2022. This was all 2023. So this was all 2021, and this was all of 2022. This was just the summer last year. Okay, the summer this year doesn't even make it look at all. This was July through August, where the August bottom happened. Am I expecting something to happen like January of last year, where you saw just a takeoff? I don't think so. I think there's too much political instability. I think there's, we're at all-time highs. The economy is just a little bit strong, not super strong. But if Trump goes through and he doesn't employ the tariffs, I think we could continue significantly higher. And I'd rather be in the market than out of the market. And so if you're thinking about getting out of the market, just read some things. Understand that getting your money out of the market and timing the market just has never worked for me personally. If it's worked for you in the past, great. Go and do it. But it hasn't worked for me. And my goal here is to guide you based on my experience, but not give you advice. It's to tell you, hey, here's the facts. Here's what I'm doing. Remember, Shows completely entertainment, just so you know. So I'm going to include in the newsletter some things. The S&P heat map yesterday looked okay. 3 of the 11 sectors closed green, with utilities leading the way and real estate lagging. Most bullish bearish symbols on this chart was NVNI, CNT. They list a bunch, and I'll put it in the newsletter. Now, as of what's going on today, add that we've got a triple witching. And go and read the newsletter from yesterday. If you don't know what a triple witching is, I put the link in there. You can absolutely find out about it. It's just options expiration at the end of the day. It increases volatility. So when you're looking for volatility, we can look at the VIX. And the VIX right now, let's see. The VIX right now is at 23. It's down 2.45 because we've seen a little bump. Yesterday, it spiked up to 27. If we just look at the 5-day of this, we're continuing up there above 20. Remember, for the last year, this has lived at about 14. So if the VIX is going to pull back to 14, the market will go up. That's just it. But with a triple witching, I don't expect this one to bump all the way up to under 20 today. Stock index futures pair losses as the core CPE came in softer than expected. Again, inflation seems to be under control, and this is the Fed's favorite inflation gauge. So I wanted to point this out too. Kobeshi letter from yesterday. They're saying value stocks. How do you find value stocks? Find a screener that can give you value stocks. Here, if you want to go over to Seeking Alpha, you can find value stocks here. You can find quant rating, and you can use all the advanced filters where you can go to valuation and just find PE. And you put in PE there, and if you want PE, you can just go down to where it's under 20. And we can look at some of these, and we can pull that up, okay? KINS, LX, PSIX, they're all under 20. So it's 29 stocks here that are under 20 that have a strong buy, that are super, super strong. General Motors, we can search this by market cap. PNC Group is the biggest one. This is a financial. Then you got General Motors, Manulife Financial, JD. Go and look at these. Just find something where you can find PE. Even FinViz has this. That's how you do it. And read this thread, because you can find some really good stocks that are trading at very low value. Now, one that's not trading at very low value, MicroStrategy. And if you look at this, this is Trendspider showing you that the charts look super, super similar. These are weekly candles. Now, if you believe in technicals and you believe in patterns, this might be what MicroStrategy doing, and it's absolutely crashing. If we look at MicroStrategy and we look at it, we can see a couple of days ago, the algorithm got you out with a loss. It got you out with a loss. Again, if you're trading MicroStrategy and you don't have a strategy, like the 4-hour algorithm, get out. The 4-hour algorithm makes you 1,733% versus buying and holding makes you 1,536% over the last 24 and a half months, 23 positions. Here's one, it wound up negative. Okay, you win 43% of the time. Again, of the 23, you win 43% of the time. You lose 57%. So are we heading into that downturn? Maybe. Look at the weekly. I mean, again, the weekly, the MACD super extended. The RSI coming off of overbought territory. So this may actually come true. Doesn't mean you kind of jump into MicroStrategy without a plan. That's a super, super volatile stock. What does Michael Saylor say? He says enjoy the ride. In fact, today he posted himself in a hard hat. He doesn't believe this. He said, just hey, stay with it. Wear a hard hat. Diamond hands. So, Steve Kress wrote yesterday, quantum computing. We saw a bunch of these. He writes about QUBT. Now, he took a lot of crap about this. QUBT he wrote about. He says, hey, it's a strong buy in the quant. And he says the quant likes this one. It's a company that has a market cap right now of $1.79 billion. And the 52-week range is between 35 cents and $27. $27. Yes. So again, read that article. But when you get into quantum stocks, know what you're buying. And you can read this article about QUBT and Steve Kress, but know what you're buying. And Bradley Freeman puts it really, really well. IONQ, nearly $9 billion in market cap. 57 times 2026 expected sales, not earnings, sales. Rigetti RGTI, $3 billion market cap, 77 times 2026 expected sales. QUBT, $2 billion in market cap, 1.5 million in 2025 expected sales. Okay, so QUBT isn't super expensive compared to Rigetti and IONQ, but you know what's even cheaper? Google. If we go and look at Google, because remember, Google started this whole quantum kind of stuff with their press release. Now, other places are more further along with their quantum stuff. But when you go and look at Google, what are they trading at? 23 PE. Okay, they actually have earnings. Yes, it's an F. Yes, it's expensive. But if you want to bet, what Brad is pointing out is understand your exposure. If you're buying those small caps on rallies, these are not proven names. They are not proven companies. They are not making actual money. They're spending way more money than they're actually making. Does the future hold promise for them? Most likely, yes. But again, they point out it's 2026 expected earnings. Google actually has earnings right now. So understand what you're getting yourself into. Now, we're not only in a quantum computing, we're in a nuclear, we are in a AI, but we're also in a GLP-1 market. And Novo Nordisk crashed after data for the next-gen obesity drug. It showed that it was, I think, 25% or 21%. It was 25% expected. Again, it's 23% compared to 16% weight loss. It was 23% expected, 25%. It was next to nothing. But this damn stock is down 20%. Okay? You're not going to be able to pick a lot of winners. And so understand that this stock is just going to, when you pick a GLP-1 and you have these trials and stuff, you're going to get hurt if the trial doesn't come out correctly. So with biotech stocks, this is why I stay out of this stuff, is because it just doesn't fit my risk tolerance. Now, Shai points it out. Novo Nordisk is down 25%. Clearly, Viking Therapeutics is the name to own in this space. He believes in that. He's got it in his portfolio. He owns it. So, again, Novo Nordisk is not his pick. So read about that stuff if you're going to invest in it. Eli Lilly has much larger drug portfolio than just GLP-1, but GLP-1 is why you're paying the substantial PE version times for that. Now, 25 highest conviction stocks, UBS, they list 25 stocks here that are they believe have upside, and they've done the risk reward calculation, and so they say these are the 25 stocks that you could buy and look at. So I like this list. I like some of these names I'll probably be looking at. There's some Amazon, which I own. And Dell Technologies, which I own. First Solar, which is interesting. Oracle, which I want to own. And they give the price target. Ulta, price target of $490. So again, 25 different names that you could look at. Now, it was interesting yesterday because, and I wrote this note. I was on Spaces yesterday with Wolf, and they asked me about Nike. And Wolf, thank you very much for making me lead off the panel on the earnings stuff with Earnings Hub and Hamid. I was actually sitting in the parking lot of a Simon Property Group mall, and the only store that was packed was Nike. I think there was I counted about 30 people, and it's a Thursday afternoon at 1 o'clock. Okay, Thursday afternoon at 1 o'clock. There was nobody in line at the Under Armour store. There was nobody in line at the Puma store. Nobody in line at the Adidas store. Nobody in line at the Reebok store. Everybody was in line at the Nike store, and I want to say it was between 40 and 50 people that were in line. Okay, I mentioned it as a bellwether, and I said, this might be the news that Nike needs. And so Nike stock, if you didn't know, has been in a complete downfall. They just don't innovate. But a month or two ago, I was in a Nike. In fact, I'm wearing a Nike sweatsuit right now, pants and hoodie. And I actually like it. First time in forever, I went into a Nike store and I actually liked what I saw and I bought a few items. That was a few months ago. Yesterday, I went to the Nike store. I didn't like what I saw, but there were so many people in line. I said, I don't know that this is the start of a turnaround, but it could be. What happened was, if you look at a 5-minute chart of Nike and you pull up the after hours, it pumped 10%. Okay, it pumped 10%. And the article, Nike rallies as investors bet on early signs of a turnaround under its new CEO. Then what happened? The CEO came out and said, you know what? It's going to be a true slog. Boom. Stock down. Stock has started to recover. I would expect it to get back to 83 at some point today. Again, the earnings were really good, but it's going to be a low slog. And what do I want to do with this stock? For me, I'd rather buy this one at 95 on its way up than 77 to see it continue down to that 66. I want to buy on an uptrend, not on a downtrend. And again, this is a long-term downtrend. The top of this is November 2021, which was the top of this stock. And you've seen it pop. But look at that resistance right there. And if that resistance at 77 right now puts us at 84, that's fantastic. But that 88 has seen resistance. So the upside is limited. I don't want to trade this on a Friday, and it's clear and present. So now FedEx, the other big earnings news yesterday was that FedEx is going to actually split into two companies. They're going to separate freight. Now, what's interesting about this, I'm going to take this and we're going to do some peers, and we're going to take FedEx and I'm going to edit symbols, and we're going to get rid of these symbols. And this is, again, what you can do with Seeking Alpha is I'm going to take the freight, and there's two freight names that trade with, it's XPO. XPO is one, and we're going to pull up XPO, and we're going to pull up Old Dominion, ODLF. Let's pull up Old Dominion, OLDF. Why am I typing that in wrong? ODLF. And what I want to do, what I want to show you is when you go down here, and again, this is going to split out freight, but when they actually split out the stock and you look at the valuation of these, okay, FedEx is trading at a PE of 14. XPO is trading at a PE of 40. Old Dominion Freight is trading at a PE of 34. You want to know why FedEx is popping? Is because there's significantly, when they break out freight, there is significant upside to that particular stock. It was up about 10%. It's up about 2%. And we're seeing the same thing with the market just dragging this one down. See how it's up here at about 299, 300, and you're seeing it back down to 283. So you're seeing it just weigh on it. But I would tell you, this is a stock that in my mind has opportunity just based on that. Now, the FedEx freight is growing. Look at the revenue growth of FedEx on its own. It's down 1.13%. But when they give you that freight stock, and it's going to take a year, it's not like you want to buy this one right now. You want to buy this when it's on an upturn. And when we look at this weekly, it's right down at that 50-day. And every time you've gotten on that weekly down to that 50-day, it's been a buying opportunity. So the MACD is reset on the weekly. You can go back to the 4-hour and look at this one, and we can run the 4-hour because the 4-hour actually makes you money. It's 30% over 24 months, 28 positions. If you bought and held, you made 55%. I would argue that we've got an opportunity to continue upwards. So, and that's, again, it's just me kind of looking at it. Do I own FedEx? No. Am I going to buy FedEx? It doesn't fit my my long-term strategy of large cap tech, but it's finding opportunities like that because if I ordered a bread machine from Japan off of Amazon. It is being shipped FedEx, and I brought that up yesterday. I said that FedEx still holds a huge place in the world shipping market. So I thought that was interesting. Now, we're going to talk about a little education here because when do you sell? And on days like, the past week, which, has seen the downturn, when do you sell? My note here kind of talks about it. When should you be looking? I always talk about buying, but selling is an art too. Remember, you need a strategy. And maybe it's the 4-hour algorithm. I got out of MicroStrategy based on the 4-hour algorithm. Did I sit there and wait? No. When I entered the trade, I knew when I was going to get out. It was the 4-hour algorithm. When I buy Apple, I know it's a long-term buy and hold. When I bought AVGO, Broadcom, back in March, I know it's a long-term buy and hold. You can take a look at the short term of AVGO, and it's been, since the earnings, we've seen the downside. You've seen a few days where it's just pulled back. But it's a long-term buy and hold for me. And do I see weakness in it? No. Uber is the same thing. I see weakness in it, but I identified it as a long-term buy and hold. Now, I do have some concerns on this one trading under 60 today. But am I getting out of it? You have to have rules. And so maybe the rules are as simple as alpha picks. Alpha picks is a portfolio that is managed. This is something where they have rules based on when they sell, and they tell you when to sell. And the Alpha Picks portfolio just greatly outperforms the market. And I don't know if I went over in the podcast or before, but remember, the premium and the Alpha Picks bundle, you save $159. It is the best tool that I have in order to find. I just went over Berkshire Hathaway versus Apple, how you can look at that one. I went over FedEx. I went over all the articles. I went over the top stocks, how to find value stocks. I went over all that. All that is Seeking Alpha Premium. Okay, Alpha Picks is a no-brainer portfolio. I bought $50,000 worth of it in November. I'm sitting there. I'm perfectly fine buying and holding, and I don't have to do anything about it. But if you don't have rules, you're just playing with your money. You're just gambling. And this is William O'Neill's stock selling rules. When a stock falls 7 to 8% below your purchase price, sell it. If the stock climbs 20 to 20% above its base, sell it. When earnings or sale growth slows significantly, sell it. If the stock breaks its key support line, which you should be identifying, sell it. And remember, key support lines, it's your own personal thought. Go through the process. You don't need an expert to tell you where the support line is. Find your own support line. And if it breaks it, sell it. You'll get better at it over time. It's just like playing golf. You don't pick up a club and win the US Open. Identify these stock charts and start identifying stuff. And if it makes sense and it works for you, it will make sense and work for you in the future. During heavy distributions by institutions, if institutions are selling, maybe you should as well. If industry conditions deteriorate, yes. If we all of a sudden go into a recession, you should be selling some stock. Shouldn't be getting out completely, but you should be trimming some stock. When a stock shows climax top patterns, we talk about this. Apple at 250 is at an all-time high. You should be trimming Apple at 250. If the overall market becomes bearish, and we go into a recession, you should be trimming. You shouldn't be getting out. But you should absolutely be trimming your QQQ and your VOO. Entries aren't everything. You must make a strategy for your exits. That's it. Make sure you have a strategy. And I talk about it all the time. If you don't know when you're going to sell when you get in and what the strategy is, you're basically just winging it. And don't wing it. If your strategy is like me, buy and hold, go ahead, buy and hold. Apple, I talk about this all the time. When we look at a monthly chart of Apple, there are several times where I endured a 60%, 42%, 36% drawdown. But overall, look at that stock chart. You wouldn't have been unhappy buying back here in 2006 at an equivalent of $2.23. You wouldn't have been unhappy back here buying in 2005 at $1.40. Even though you had to go through those downturns. If you took $1,000 and put it in there in 2005, that has grown significantly. It has seen the drawdowns. And yes, you will go through it. And no, it's not luck. Again, identifying good companies with good products, with good profits and good management, that will help you in the long term. And if you want to sell during those downturns, absolutely. But understand my psychology for me, and this is my personal opinion, I don't know when to get back in. NVIDIA, same kind of thing. People are, I bought NVIDIA at about 130. Am I selling? No. And the reason is because this could be, again, 2022, when you're seeing it down at that $13 land. You could be seeing a $6 trillion company, or they could be buying back a bunch of stocks, a bunch of shares. Or, again, I don't know what's in the future for this stuff, but I feel very comfortable holding at 130 and 140, even though it's at 128 right now. It's all about building that muscle up for you. Now, there are very few scans, and it's a Friday, so I wouldn't expect you to buy anything necessarily. We have McKesson, MCK, which has an entry. I think this was from one of the NASDAQ lists or something. Yeah, McKesson Corporation at 578. You can see this one has just been an upward trend. And every time you get close to that 50-day, it's been a buying opportunity. Am I buying this one? No, it doesn't fit my strategy. ACN is another one that has an entry. Accenture, and they just announced earnings yesterday. They just announced, or a few days ago, let's see, I have a note in here. I have a note from a couple of stocks. Accenture, the IT services giant, reported an earnings beat and upbeat guidance with demand for AI-powered tools helping regenerate revenue growth. So we can go over here and we can look at seeking, I don't know anything about it, but hey, I just got a 4-hour algorithm pull up. Well, the quant says it's a hold, and it's been a hold for a very long time. Let's see, the last time it was a buy. Was at 306 back here in May. And where's the stock? It's trading at 360. Now, if you go and look at Wall Street, what does Wall Street say it's worth? 395 and 8% upside. So maybe you want to use the 4-hour algorithm and trade this one. If you use the 4-hour algorithm, it makes you 16% over the last 24 months with 29 positions. For me, too many trades, more than once a month, and it doesn't beat buy and hold. So I'm looking more at the weekly, and I'm going to say, hey, if I get close to that 50-day on ACN, maybe it makes sense for me. But, again, this is not in my realm. I just kind of bring you these ideas, and I tell you, hey, the tools are out there. Whatever your investment strategy is, you can find it using these tools. And you can find it using free tools as well. Don't overestimate free tools. For years, I used FinViz. For just currently, I'm using Webull as my trading platform, okay? You can get free stocks when you sign up for Webull. What's my Webull account at? It is mainly IBIT, which is Bitcoin, and it's NVIDIA. And so this one has seen significant downturn. It was like 11,300 the other day. It's now at 10,642. I will show you right there. It's 10,642. Well, 10,639. I'm down, 0.72% today. So, again, that's a play portfolio. It's not something that I would ever take my big portfolio and put it into. Everything that you need is here on the link tree. linktr.ee/daily stock pick. Don't forget, there is an annual sale going on this weekend. Okay. It is just this weekend. Save 71% off of Trendspider. You see how much I use those charts. The 4-hour algorithm is key, and I will guide you to, with the annual sale, you want to look at this advanced tier. The reason you want advanced tier is because it comes with unlimited one-on-one training. And so if you get the enhanced tier, I wouldn't go with the standard tier. The discount is not enough. The enhanced tier is just enough discount to make it worthwhile to go up to there. The enhanced tier comes with one-on-one training. So it's only one. You get one. They'll help you set up your system. They'll help you go through that stuff. But it doesn't teach you how to use the platform. It's just general stuff. Okay? The advanced tier. You want to know how to use the MACD? Hey, how do I set up the MACD? Well, what does this mean? What does that mean? You can ask them questions about that kind of stuff. They can't give you investment advice. They're not going to tell you stocks. They're going to help you set up scanners. They're going to help you set up watch lists. They're going to do everything that you need done in order to make you successful in the first year. Again, remember, Trendspider's inspiration is to try and make you successful as a trader and investor. My goal of this podcast is not to feed you, oh my God, here's a stock that you should buy. It's to feed you information so that you can find your investment strategy that fits you. And again, I'm only providing you what has worked for me. And I may tell you, hey, I don't like this stock. Doesn't mean you get out of it. So if you have any question, I will be back Monday. But have a great weekend, everybody. I'll talk to you later. Bye. I think that was a long one. Oh, Keo, Steve and I, by the way, Steve Kress and I email back and forth a few times. It's not like a regular friendship, but he'd come back on the podcast if I invited him. I think I may invite him in the new year. Maybe after the 2025 stock picks, I'll invite him. We'll do another one. I have a, here. If you go to YouTube, if you go to my YouTube channel, let's see. I think I've got playlists, tools I use. We're not going to play that. Where's my interview with Steve Kress? Is it on here? No. Steve Kress Daily Stock Pick. I think you can find it that way. There it is. Right here.
Steve and I go over mostly.
Here, I'll share it out. Copy. It's a bit dated, but it actually does show you. He shows you how to use the platform. So it's a great video. I mean, I'm proud of that one. And he enjoyed it. He said he enjoyed it a lot. Steve's amazing. I mean, he really, really is. So, but Steve is far better than I am. Far more advanced than I am. In fact, my guess is Steve is probably wealthier than I am. I would hope. I would hope. But he's great. I mean, he really is. And he's the nicest gentleman. He really is the nicest man. I mean, to take time out to talk to me when I was just a dumbass. That was when I was first. I think I had first become when was it? Let me see. Let's see. That was.
Why is everyone?
That was 8 months ago. So, let's see. 8 months ago. Yeah, it doesn't tell me. Doesn't tell me completely. 8 months ago was what? I started, I think, as an affiliate in February with Alpha Picks. And I was amazed at the performance, and I went back and forth, and he goes over a lot of the Alpha Pick stuff on there. I mean, they can yell at me all they want, but he goes over, he put together a portfolio, so he's allowed to, I guess. But, okay. Let me see, portfolio check. I'll check my main portfolio. I'm going to be, I'm going to be down. I wouldn't be surprised if I'm down 6 figures today again. No. I didn't give back everything that I made. No, I did. Yeah. I'm down 0.86%. And in Webull, I'm down 0.64%. And why is that? What's up in this one? Oh, it's because iBit came back. iBit and NVIDIA are back to 0.67% down. But Apple's like down, let's see, Apple is down 1%, I think. Let's see. Yeah, Apple's down 1.16. That's what's driving my portfolio. And you can see it turning over right there. I wouldn't expect it to get back to anything, at 254. I mean, that's a big move for that stock if it it needs some type of catalyst for that. But go into your mall, your local mall, and I guarantee you there's a line at the Apple store. Okay, I'm out of here. See you guys Monday. Enjoy.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.